Hey guys, what's going on? It's Rekt Capital and welcome back here to the Rekt Capital channel on YouTube. Thanks so much for tuning in today's episode. We're going to be talking about the 200-week moving average, which has historically preceded generational bottoms in market cycles for Bitcoin. Bear market bottoms have historically formed around the 200-week moving average or just below it. So we're going to be talking about what we're seeing in this current market context, comparing that to history, particularly whether we're seeing macro ranges form at the 200-week moving average, the downside wicks below that moving average, and so much more. Feel free to subscribe to the channel for more videos like this in the future. And of course, at the end of the video, we're going to be focusing on Syscoin, which is our sponsor for today's episode. So feel free to check that out later on as well. Let's dive right into the video. So this is a 200-week moving average, and Bitcoin has weekly candle close below this moving average for a few weeks in a row. 2 weeks ago, we saw resistance here, upside wicks, so FOMO wicks beyond that resistance. But last week, we got the very first weekly candle close above the 200-week moving average in a long time. So if we just focus quickly on this chart, this is where we got the last weekly candle close above the 200-week moving average. So March 2020. So it's been quite a long time. And now Bitcoin is trying to successfully retest this moving average as a support. But the problem with that is that we are seeing very little volume right over here. Very little volume to support that retest. But by the same token, rather than buy side volume coming in, we're seeing predominantly seller volume occupy the market at this time. At least we are really deep into the week at the moment. It's almost a weekend and volume is still low and volume is still sell side focused. So not necessarily a good sign, because historically we've seen tremendous buy side pressure emerge from recovering the 200-week moving average as a support and then rallying to new all-time highs months later. At the moment, we're not really seeing much buy-side interest be generated here at this historical pivotal indicator. So that's one thing to mention. But also the other thing to mention is that we've seen multiple weeks of consolidation below this indicator, whereas in the past, we've seen downside wicking, perhaps macro ranges forming at the indicator, downside wicking and downside wicking. So what could we say about these wicks? Historically, these wicks tend to be minus 14% to 28% deep. And if we just focus on 2015 as a sideways range, an accumulation range forming at this 200-week moving average, very similar to the sideways accumulation range that formed at the MA once again here in 2018, roughly speaking. This was a I believe it was minus 14% downside wicking below the 200-week moving average. No wicking here, but definitely strong volatile V-shaped wicking right over here in March 2020, where we saw a minus 28% downside wick. And of course, this was a chart I shared in late May. So we actually didn't really get to that point just yet here, but this is a downside wick of minus 22%. So if we just juxtapose that with history, we're still very much in the range of downside wicking. Minus 22% definitely falls in that range, minus 28% being the extreme side of that range. But having said that, these have been downside wicks below the 200-week MA. We're seeing actual candle closes and multi-week candle closes below this MA. So there is a different type of reaction occurring here, and it's not necessarily the one we'd like to see for a generational bottom to form immediately, at least, because historically we've seen V-shaped reversals from this sort of downside deviation below the wick, or at least forming some sort of range against the 200 MA. So we're not seeing that right now. We're in fact seeing downside price action, but formulating in a crystallized, sustainable way via the closes. So we're seeing a range form below the 200-week moving average. So the way I like to conceptualize it is still very much in the same way. Anything below the 200 MA is a bargain for long-term investors, as it was the case in 2015 as well. And we used to see wicks before, but now we're seeing candle closes. But this still means that we are seeing downside deviation into bargain buying territory, and minus 22% that we're seeing right now is very much in that range, even though we're seeing weekly candle closes. But let's move away from the 200-week moving average for the time being. Let's focus on price action in terms of monthly supports and resistances. So the 20k region used to be a psychological inflection point for sellers and buyers alike. FOMO wicking into 20k, sellers offloading there, market cycle peaking occurring in 2017, and then this psychological inflection point being the one that propels price to new all-time highs essentially. 20k is still a psychological inflection point, but probably not on the same magnitude of what we'd perhaps come to expect as we saw earlier in 2021, late 2020. So some sort of relief could take place, and that relief, of course, coming from a psychological round number as 20k, with very little monthly resistance on the way up to 29k. That's pretty much where we could see a range start forming. But of course, for that to take place, this retest would need to be successful, and the volume isn't there at the moment, but let's just suppose that that retest is going to be successful. Buy side volume will come in, it will be above average. So this blue level here, this 20 moving average, is the average indicator of volume. If we get above average buy side volume, then that retest could be successful, and that would essentially confirm further upside into this range. So that's the next resistance, the next major monthly resistance, 29k. But we do have some other major resistances in the mid 30s, which was once upon a time a key level of support back in the day in November and generally throughout 2021. Major support here, but probably going to be a major resistance if we even manage to get there, depending on the buy side volume. But for the time being, this is going to be the range to watch out for, and at the same time, the 200-week moving average as a reference point for confirming further upside or downside, depending on that retest or not. What's interesting is that the bull market EMAs on the weekly time frame, the blue 50-week EMA and the green 21-week EMA, these are bull market EMAs, and it's interesting to see how the 50-week EMA is actually aligning with that red resistance right over here, the major resistance. And it's interesting to see how this 21-week EMA is aligning with the 29k major resistance. So really interesting to see how these EMAs are aligning with major monthly resistances, just confirming their strength. Because for Bitcoin to return to a bull market, it would need to successfully retest this 21-week moving average. And seeing as this EMA is here in a confluent area of resistance, those chances aren't looking too good at the moment. But at the same time, anything below this historical bull market EMA is probably going to be an outsized opportunity for investors going forward. So in any case, that's about it for today's video. Thanks so much for watching today. Subscribe to the channel for more videos like this in the future. And of course, feel free to stay tuned for our sponsor, Syscoin, where I delve into their project in a bit more detail and talk about their major updates. So without further ado, let's dive right into that Syscoin segment. Guys, welcome to this part of the segment where we're going to be talking about the Syscoin roadmap in a bit more detail. We'll be talking about Syscoin as a layer 1 protocol which marries the best of Bitcoin and Ethereum all in one place. We'll be talking about the specific parts of the roadmap, talking about proof of data availability, but moving on to Rolux with a layer 2 suite to serve Web3 at scale, talking about the different types of rollups from ZK to optimistic and even compliance focused services. And we're also going to be talking about DAO Sys. So lots to talk about in this video. We will have also some video going on in the background from the DC Central conference in Austin, where Syscoin were present and talking with the community and presenting on about their project and their roadmap. Before we talk about proof of data availability, Syscoin in general is a layer 1 protocol that takes the best of Bitcoin and Ethereum to build a smart contract platform with better finality and decentralization while making the most of the strength of Bitcoin's proof of work. And Syscoin generally is one of the first blockchain platforms that will implement zero knowledge rollups. So those are the ZK rollups that I mentioned earlier, and they're going to be implementing that on a considerable scale, because these ZK rollups are perceived as one of the most promising scalability mechanisms, pushing the industry to new heights, and we're going to make that more clear as we go along in this video. So first of all, let's start off with proof of data availability. Syscoin is a innovative part of the community in crypto. They are most likely going to be part of one of the first projects to be able to fully scale securely with Bitcoin merged mine backing. So the best way and easiest way to understand this is fast, scalable, decentralized applications and smart contracts on Bitcoin. And one of the partnerships that are going to enable this merged mining is the partnerships with Jaxx Network. And if we just focus here on the article which talks about this partnership, this is going to enable a merged mining to secure the networks and offer incentives to miners in the form of additional block rewards on top of Bitcoin mining. So just to talk about merged mining in a bit more detail, this is essentially green mining. So this partnership is going to enable a wider adoption of green mining where energy is simply being reused and recycled. So what is already spent on mining Bitcoin is being recycled. So it's a more eco-friendly way of using this energy, recycling it. And in saying that, that's going to enable other parts of the network to benefit from higher security, but also allow miners to earn more rewards without any loss of hash rate or increased operating costs. And Syscoin as a project has always been innovative. It's been around for a long time, since 2014, so not too far away from being a decade in the space. But generally, this sort of collaboration between Jaxx Network and the usage of the merge mining algorithm, well, not many projects are doing that. So they really are. Syscoin as well as Jaxx Network are really on the forefront of just pushing the boundaries. So that's one part of the roadmap that's being strongly worked on. And let's focus on Rollups. And we're going to be talking about the different types of rollups in general, from ZK, zero knowledge, to optimistic, and also even compliance focused rollups. These are still ahead for this year in the roadmap, but let's talk about what is Rollups and what these rollups mean. So what Rollups enables and features is, first of all, scalability, which fuels adoption. So the Syscoin ecosystem is going to scale to lower transaction fees thanks to these ZK rollups. These ZK rollups are going to make the blockchain a little bit more efficient, a bit more user-friendly, which in turn, of course, enables and translates into adoption of decentralized applications. So first of all, we need to focus on the first two major rollups. We have optimistic and ZK rollups, and this is a fantastic graphic which just showcases to us the different rollups and how they impact the blockchain. So even if we're just focusing on the topic of scalability, you can see that optimistic rollups, moderate increase, but here there's a significant increase, up to 4x in terms of the optimistic rollup when we compare them. But at the same time to finality, 2 weeks versus up to 20 minutes. So we're seeing that ZK rollups are definitely an improvement over optimistic rollups. Let's touch upon the last thing here in the roadmap, and that's DAO-Sys, which is all about building a revolutionary treasury management system to supercharge ecosystem growth. And talking about DAO-Sys here, this is an update on the Syscoin website where Syscoin mentions that they are on track to applying a bridging solution for layer 2, and this is going to enable a great bridging solution between layer 1 assets onto Rollups for efficient management with layer 2, because overall with Rollups, all of this means that flexible DAO platforms that take advantage of layer 1 DeFi they will be able to do that with the reduced cost of layer 2 rollups. Remember, layer 2 rollups are reducing transaction fees, making the user experience a simpler and fast, more secure experience. So naturally, the natural step after that in building these bridging solutions is that in the future, Syscoin will want to extend this infrastructure and enable those cross-chain transactions. So we know of Syscoin's roadmap, we know where they're heading to, but where is Syscoin going in terms of conferences in the future? Well, there's the upcoming Singapore Token 2049 conference event that Syscoin will be attending, and at the same time at HotepCon 2022 in August, mid-August, loads of influencers or celebrities are going to be at that event, but Syscoin is going to be the only blockchain sponsor there. So check out the link in the description for those events where you can find Syscoin going forward in the future. And of course, feel free to check out the website in the description down below to learn a bit more about the Syscoin project. Feel free to check out the links to those conferences and different resources, whether that's about ZK rollups or proof of data availability. In any case, that's about it for today's video on Syscoin. I hope you enjoyed it. Thanks so much for tuning in. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.